Everyone, welcome back to another penny stock video. Today we're going to go over TRCH, Torchlight Energy Resources, and their very unique merger with Metamaterials company, which is a very unique company as well. So this is just overall a very unique situation. So I'm going to briefly just outline what has gone on with this company in the past, just to give you a general idea of what we're going to be analyzing here in this video. So Torchlight in September decided that they're going to merge with Metamaterials, but it's not just a merge per se. Torchlight is actually ending their company. They're diluting everything and putting all of their efforts and resources into Metamaterials. Now, since then, the stock has gone from about from the pennies, 26 cents, all the way up to 280 at an all-time high of 429. And for the most part, this is not because of the merger. This is instead because of the dividend. Everything that they are going to be selling off is going to be coming back to the shareholders in a special dividend. So basically, everyone's estimating what these assets are all worth and trying to decide how much every single share is going to get. Now, there's ranges all the way from like 30 cents all the way to like $2, so you never really know. But if you get a $1 special dividend and you have 200 shares, there's a very good amount of money for those people that, put in 20 cents down here. Now, today we're going to decide if we should still put money in, of course, and is this special dividend actually going to be what they think it's going to be. So first things first, let's briefly go over what Metamaterial is if you're looking to hold on to this thing for a long term, and then we'll get into the special dividend, because that is, in my opinion, what is really making the stock soar. Alright, so in short, appropriately designed metamaterials can affect waves of electromagnetic radiation or sound in a manner not observed in bulk materials. So these can be applied in a very large, different applications, including medical offices, aerospace, infrastructure, solar panels, so many different things, and they already have so many different partners already. Just to look at a few guys, these are some big names here. They are working with all of these companies, all the way from Boeing to Airbus to Lockheed Martin, and then of course the list goes on and on. And a lot of people are trying to get on this new wave of application, especially medical offices, because this has the chance to make MRIs and anything where you have to do any scanning a lot easier. And if you want a full video on that, go onto Metamaterials YouTube channel, and they have a full video explaining their company. Now, as for what I find important as in the actual merging details, the merger is not looking the best for Torchlight as in the actual acquisition. It's okay, but it's looking a little overvalued at where it's at right now. But this is all dependent on what the special dividend is. Now, this special dividend can be very high or very low, but the way that the insider buying is going, which there's only 2 insider buyers because there's only 2 employees of the company, but they are buying a lot of shares. Just the CEO owns 16% of the entire company, and that's about 15 million plus shares, somewhere between 15 and 16 million shares. Other than that, the deal is going to look very simple. Once this transaction actually goes through, Meta is going to have 75% interest in this, so that remains 25% is going to go to the TRCH legacy shareholders. So that is stated in these bullets right here, these are the most important bullets of all of these. And Torchlight will have 25%, Meta 75%, and this ownership had to erase all debt, so they had to liquidate some, which is not too big of a deal, but they did have to liquidate a little bit just to be able to get in and pay off that debt. And they also even set a loan out of $10 million to Meta already before they officially combine or merge or whatever you want to call it, so that Metamaterial can start on the business plan in advance. This loan is going to be able to let them at least get some work done and give them operating capital to work with, because there is still quite a lot of time before this money is going to get out of the oil and gas industry, which is what Torchlight is originally in, and that needs to be sold by June 30th, 2021. And right here, Torchlight legacy shareholders will be entitled to a distribution of any values attributable to the sale of Torchlight's existing oil and gas business asset. So at this point, we're sitting, all debt is paid off now. They have a loan out to Meta just so they could work now, and the last step is completely finishing this shareholder transaction. And then by June 30th, they need to sell off all oil, all land, basically any single asset that they have, even including leased land that they currently are in charge of. So the dividend is very speculative at best, and that's what we're going to go off of mostly. Unfortunately, that is all we can go off of, because it's just a wash in the park here to determine if this is, going to be a massive $3 dividend per share, or if it's going to be a 50 cent, 25 cent, depending on what it is. Now, the first great news, probably not for your day-to-day life, but for the company, is gas prices have been surging. So all oil and gas that they are in charge of right now is going up in value as we speak. And when they sell this off, this is going to have more value. Currently, it is estimated that the Texas basin which their land is actually on has a estimated 3.7 billion barrels of oil equivalent, and they still have not figured out how to sell that. So with all of these numbers, people have estimated between 1 and 3. We're not going to get into estimations because honestly, there's no chance I'll be right. I think at this point, it's just them throwing a number out there, but I can see 50 cents to $1.50 definitely possible. I don't see it any higher, any lower, but once again, this is all speculation. But the thing I really like is that the shareholders, okay, Greg McCabe, he's the director. He's basically does everything around there. He's the leader of the business and such, and he currently owns 16% of the company, and he has been buying more ever since December. Okay, he's made a great return. As you guys could see, 46 cents is when he was buying in hard, 32 cents originally, 46 cents the second time around. So he is buying a boatload of shares. What this shows me is he's going to try to make the special dividend as high as possible because that will benefit him directly. If he can get $1 dividend per share, he will be sitting on $16 million. So there's a lot of insider pressure to make this dividend as powerful as it can. So he has 32 years in the field of oil and gas. So I'm sure he's going to maximize what he gets out of the two largest assets that are out of the basins in Texas. So finally, let's talk about what I would do personally and all of the scenarios I see playing out. So the first scenario is, of course, TRCH. This is Torchlight. And this scenario is probably the best case scenario for everyone. TRCH, you have 100 shares. It gets converted to 25 shares because it is only receiving 25% of the business. But after the merger, the new ticker gets pumped all the way up. And then basically you have the new ticker at whatever it is, $5, $6, say it gets pumped all the way up to that. And then you get a special dividend somewhere between $3 and $10. If we have that big of a dividend, that is the best case scenario for TRCH. Worst case scenario is that you have the 100 shares, only gets 25 shares of the new company. The new company is pretty stagnant, but then you wait a few more months till June to actually receive your dividend. And if this dividend sucks, you are SOL, okay? Because you have lost a lot of money. And then what I see potentially happening is we get to the ex-dividend date, everyone collects the dividend, and the stock just plummets to the ground in June. That is the most likely for me. I think that this thing is going to hold a support line here where it's held a support over the past 5 years, all the way back to 2016. It has always bounced off this 180 line before retracing back down, and it is no different this time. I think it's just going to actually hold this as a support instead of using it as a resistance. And this could last a few days, few weeks. I have no idea, but if it does break below this, then it should retrace and just hit this as support until the special dividend. Once the special dividend comes out, I see another retracement back down, and that's probably what's going to happen with the new ticker as well. But that's just my 2 cents on that. Now, personally, at these ranges, this is the riskiest time that you could possibly get in at $2.80 per share, but people are asking for analysis of this company, and this is the best that I could do without just trying to get your hopes up too high, because I know a lot of people do that, but it's just unrealistic to the max to think that this is going to get a $10 dividend and everyone's going to be rich that buys in right now. It's possible, but it's speculation. So do everything at your own risk. As always, this is just due diligence at best, and I hope you guys got some value out of this. If you did, subscribe. We have about 10 subscribers right now. We're trying to run this channel up as well. Also check out Market Theory. That is the main channel here, and we got about 2,700 subscribers on that one, and that one just started as well. So I'll see you guys in the next one. Have a good day. Bye-bye.